Day everyone, welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm a certified professional digital trader with 13 years of experience. I'm the founder of Tenet Digital Lane, where everyone who has a knowledge gap in digital trading, real estate, wealth building can be able to get a package, either a 1 month package, a 3 month package, a 6 month package, or 1 year package to learn our material. After they have learned our materials and gone through our training programs and sequence, we'll be able to use the education they have learned to make money in those industries. So diving into today, we'll be going through the technical breakdown of the market for the time period of September 4th to September 8th. And after that, we also go through the fundamentals, driving the market, and what we forecast it to be. So do watch the end. We have a lot of value, we have a lot of giveaway, so you won't miss out on those opportunities. So starting is DXY. We're starting up with DXY. DXY is the strength of the dollar. DXY is the strength of the dollar. So what we say that DXY is strength of the dollar, it means that DXY itself is able to promote, is able to increase the value of the dollar. That's what it means. DXY is able to increase the value of the dollar. So when we say DXY is able to increase, it means that when DXY increases in value, dollar increases in value. And when DXY decreases in value, dollar decreases in value. So over here, we see that DXY got to this resistance level and dropped down. Then, like I told you guys last week, if the market moves down before NFP will take the market to the upside. So currently, this move to the upside is still in the market. It's still playing out in the market. The flow is still in the market. So what I want you to do now is that you should know that if you find a little corrective structure, it might not be this deep, but it's going to be a corrective structure. And after that, you should expect one more push to the upside into this resistance. Well, there's a lot of liquidity here. So that's what I see for DX. Then the next on our list is the euro against the dollar. Euro against the dollar is about 80% correlated to DXY. So if DXY is moving up, euro USD should be moving down. And if DXY is moving down, euro USD should be moving up. So based on the structure of the market currently, I see that euro USD has been moving down. Euro USD has been moving down, and DXY has been moving up. Throughout August, DXY moved down, and starting off last week, the market gave us this up. But before the week could round up, the market almost closed at the level where it opened up for last week. So this was NFP news that pushed the market to the upside. Whipsaw took out a lot of retail traders that went in for a buy and came back down, and took out a lot of traders that went in for a sell as well. They continue pushing down. So this weekend flow, NFP flow, is still in the market. So we are going to expect a little corrective structure. It might not be this deep. Then one more push to the downside. That's what we see from euro USD currently. Corrective structure, one more push to the downside. Then the next pair on our list for today is gbpusd. gbpusd. That's the next pair on our list today. If you have any pair you want me to analyze, drop the comment on the comment section the pair you want me to analyze for you. So I'll figure out and know the pair to analyze for you. If you have any questions, drop it on the comment section and I will handle the questions as soon as we are done. So gbpusd is quite different but similar too. So for gbpusd, we expect a currency structure to the currency structure will be or push 1.25. So when it gets 100, that's when I'm taking at least 90% of my profit out from the trade. When I get a good sell setup, so we're looking for a sell setup. The currency structure to the upside, then a sell setup. Okay, currency structure to the upside, then sell setup to the downside. Then we'll be taking our 90% profit at 1.2500 for DXY. Sorry, for gbpusd. Then the next pair on our list is gold. Gold is the next pair on our list. As at the week of this particular week, that's when gold change direction, 7th August, and it has been moving up. I told you guys in our forecast that we're expecting gold to go to 1950. That is 1950, 1950 zeros per ounce. So currently for gold, we're still on a massive uptrend though, and we have our H4 validation point up here where I expect the market to get to before I can be entering massive sales. So currently on gold, we're trading this corrective structure and the NFP flows from last week. When it gets to this point, you're going to be scalping it. It's a scalp trade. So you have to be very, very careful. If you're not a scalper, you can leave it out. You can leave it out. You understand? Not to scalp this gold trade to the downside. If you're a swing trader, you're looking up for your buy setups and even for your team at this H4 validation point, 1976. That's what we're taking out about 90% of your trade setup. Because I have my trades that are running that's in here. I have trades that was entered in here. I have trades that was entered in here. So the whole. Then the next on our list is US oil. US oil massively. The price of US oil have been index price. It's an index price. The correlated price of all the oil producing companies in the world to derive this price of $85.98 per barrel. So currently for US oil, we're inside the daily validation point, which is this schedule line. So I'm expecting a little corrective structure to take out what these daily validation points where we have a major reversal area. Then from here, we'll now start seeing a little bit of consolidation before we pull back. Correction, push up, validate H4 validation point, accumulation, buy stop and sell stops before the next pullback. That's what I see for US oil. Then the next on our list is Bitcoin. DXY is strong and moving to the upside. So as well, I'm expecting Bitcoin to move to the downside, and I will explain to you why I expect Bitcoin to move to the downside. So why I expect Bitcoin to move to the downside is because currently there is liquidity lying here. There's liquidity lying here on Bitcoin. There's liquidity lying here on Bitcoin. And also there's liquidity lying here. I expect the market to come and take out this liquidity here. And then there's a H4 position point at psychological level of 25,000. When the market gets to this point, we could expect the market to hold it and push up. And if the push is going to go up, we're going to head into the psychological level of about 29,500. That's why we have the next position point and order block. This is the H4 order block as well. When the market breaks this order block, we can be seeing more drop towards the next H4 order block, which is quite far. than expected. So the moves we are seeing here on Bitcoin, the move we are seeing on Bitcoin is quite similar to these moves here. This past move here, down, currency structure to the upside, under downward push before the massive impulsive up push. So that's what I see for Bitcoin. It's still going to take out liquidity over here, take out liquidity over here, and then we have this validation point. If you break that, then by next week we'll be updating you again. So stay tuned for more updates for next week. So if you don't understand what we're talking about, like I said, Digital Lane, we are an academy that offers you the value to be able to learn how to trade digital market, how to earn money on real estate, digital real estate, and how to be able to invest in safe assets and make massive passive income and returns from it. So we have global teams in USA, we have a team in Russia, we have a team in Canada, and they are working all together to make sure that they offer you the best services and products. Over here is our courses. We have the crypto course, we have the audio book that gives you self-development, we have the rise and grind session. This one is much free for every single individual. I'll be dropping this link on the description to gain access to this particular free content, rise and grind. Our purpose and passion is leadership and financial freedom. What makes us happy is seeing the transformation in the lives of the people in the world when they become less bothered about money and live the life that they love. So when you're able to learn about self-development, mindset build, that is why we're offering you rise and grind for free. But for our forex courses and our crypto courses, you need to pay for a package. Over here is our package subscription prices: $49 for a month, $139.65 for 3 months, $264.06 for 6 months, and $470.04 for a year. And this is quite what a massive return of your investment. The value you'll be getting here, because from the 3 months package to the 1 year package, you stand a chance to earn a $5,000 funded profit account from our academy when you pass our quiz. So you are getting 100% return of your capital, which is an investment in yourself. So now let's dive into the fundamentals. For the fundamentals, starting the week is balance of trade for the euro, which has to do with the total goods and services which have been imported and exported within the country. And this is for the particular country of Germany. And we also have unemployment changes for Spain. So we're watching at 7 a.m. West African time, and currently you can see that the total balance of trade, which is 19.1 billion, is higher than the previous, which is a good signal for strength for the euro. Then on Tuesday, we dive into the AUD Jugo Bank Service PMI, and then that was early in the morning Asian session. We don't trade Asian session, but we're focusing more on London session, where we have HCOB Service PMI for the euro. We have the HCOB Service PMI for Italy, Spain, France, Germany, and Euro Central. That is by 8:15 a.m. on Tuesday. So we'll be trading live with the team exactly by 8 o'clock. We'll start the trading session so that I'm able to scalp this trading opportunity and make massive profits. Then on Tuesday morning as well, we have GBP, S&P Global, CIPS Service PMI. This could be the news we need to push the market to the upside for GBP USD. So we'll be watching out for that as well. Then on Wednesday, London session, we have Euro Central retail sales year over year. We have to do with the total goods and services sold within the Euro Central region within this year, month of July last year to this month of July this year. Then retail sales month over month for July, which is for the Euro Central as well. That's for Wednesday. We have a lot of high impact news for Euro and not much for the dollar. Then during New York session, we have S&P Global Service PMI for the dollar, ISM Service PMI for the dollar as well, which could be the momentum we needed to push the market to the downside on Wednesday, pushing GBP USD to the downside, Euro USD to the downside. This could be the news we needed. So we're watching out for that. We're trading New York session live on Wednesday with the team. Then on Thursday, we have early London session, CHF unemployment rate, Italy retail sales year over year, Italy retail sales month over month, and unemployment changes and unemployment changes year over year for the Euro Central. This could be a corrective structure news for the Euro. Then heading into London session, New York session, we can expect the what continuous sell pressure for the dollar, which is for the initial jobless claims 4 week average, because the last week on was quite positive for the dollar. Jobless claims, it was quite positive and it made the dollar to be massively strong. So I expect that this week will not disappoint as well. Then ending the week, CPI, which is a massive high impact news for Euro, London session for Germany, and then we'll be expecting what some good trade setups for the Euro pairs, and we hope not to miss out on that. Then Canadian unemployment rates and employment changes for the Canadian dollar. So we don't have any setup mainly for the Canadian dollar, so we'll be focusing more on Friday for the Euro CPI data, which is an opportunity to make some quick pips in the market. I hope you got value. If you got value, please smash the like button. Comment below which pair is your favorite pair and which day of the week you'll be trading with us. Also, share this with your friends, with your family, with your loved ones. And I hope that this content is able to impact your trading this week and give you a profitable week. Remember, trading is all about 80% waiting, 10% buying, 10% selling. You need to what? Set your psychology to the right. When you place a trade, set and forget. Let the trade run. Whatever the outcome is, you apply proper risk management. Risking 1% of your account to make 3% of your account, or 1% of your account to make 5% of your account. Stick to the trading plan. If you lose the trade, you carry on to the next trade, knowing fully well that you have applied proper risk management. One trade can change an account forever, and one trade can change your life forever. So stick to the journey, stick to the process. This is Anthony Phillips Njoko signing out. Peace.